Hey everyone, Corey and Chad here with another daily editorial on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, boy oh boy, a lot has happened since we chatted last week. We have gold moving substantially higher. Silver even had a nice pop at the tail end of last week and early on this week. The underlying stocks had a good day more at the beginning of this week and kind of gone more or less sideways since. Same with silver. Look, this is all coming on the back of now more recession fears, banking collapses in the US, and even banking weakness around the world. When it comes to gold, Jordan, on the charts, gold is over 1900. It's flirting with that 1950 level. What matters for the gold price as we progress through this week and through the rest of this month?
Yeah, to try and be as concise as I can, 1950, the close above 1950. So let's see how it closes this week and how it closes the month, because the end of this month is the end of the first quarter. And so if you're looking at the monthly chart for the weekly chart, quarterly and monthly chart, 1950 is significant resistance in every case. If you're looking at the quarterly chart, a close above 1953 to be exact, that would be a new quarterly all-time high. If you get that close and you do it on the monthly, it's the third highest quarterly close ever. Nevertheless, it's still significant because you're breaking above all the resistance from last year and, the cyclical bear or correction for 2+ years. So it's also significant on the weekly case. So to be exact, 1953 in nominal terms, that's the level that we should be following. And in addition to that, I'm also watching very closely gold against foreign currencies, which is another way of looking at that is gold multiplied by the US dollar. So that's looking at gold without the help of dollar weakness. And then gold against the stock market, of course, which we've talked about for 5 or 6 years, ever since I started doing these interviews with you guys, because those two ratios, you could say, they lead the gold price in dollars. They tend to make higher highs and new all-time highs before the gold price in dollars. And I think where we are today, again, gold against foreign currencies, gold against the stock market, today we are basically, for both of those, would be the second highest close in, well, each is different, but basically if we get another up day after today, we're in those charts, you're looking at higher highs. And so that would seem to imply that, maybe gold could get above 1950 in the short term. But so those are basically the three things I'm looking at most closely.
Okay, Jordan. Well, we'll keep our eyes on the gold against the foreign currencies, the gold against the S&P to see how it's doing in real terms against the markets, and then just the gold price action on that monthly and quarterly close as we end March. See if we can get above that 1953 level. If all those things are jiving together, that would set up a pretty good bullish picture for the metals. But on the other side of the fence, let's just say that, there's still a lot of month left in March, things turn back down again, and we don't get that higher close. When we had talked last time, you were still concerned that if there was weakness in the sector, we could go back and test the lows of last year in the metals and the mining stocks. Do you think this recent leg higher, a lot of this predicated on the back of this banking chaos that we're seeing out there, and is giving a safe haven bid to gold? Do you think that's got us out of the danger zone as far as that relates to going back and testing the lows of last year? Could we just kind of trend sideways even if we don't break out from this level?
Yeah, well, to be specific about the lows of last year, I mean, I was talking about silver and the mining stocks, not gold. I mean, I don't want to make a definitive proclamation on that because, who knows, maybe, the bear scenario is gold has some big reversal at 1950 and, we're getting into a recessionary environment. If you look at what oil and copper are doing, you look at commodity prices as a whole, look at the inflation expectations, ETF, they're all diving. So inflation expectations are diving. You're going to have a recession coming. I mean, the yield curve, wow, look at the 2-year yield today. I hope somebody other than me, you guys interview, talks about that because that's had an unprecedented dive in just the last 4 or 5 days. So you look at all these things, they're screaming inflation is plunging, recession. And so in that scenario, silver is going to underperform gold for a while. So you have that. And, if the stock market's really diving and it's going to, I hate to use the C word, crash, but if you get this accelerated decline in the next 3, 4, 5 months, and it comes down to, like, let's say 3,200 on the S&P, yeah, I mean, maybe that pulls down silver and also the mining stocks. I mean, I don't think, in a realistic worst case scenario, I don't think the mining stocks would go, 100% of the way back down to those 22 lows, but maybe they get somewhat close. So I think that's still a scenario that we can't completely rule out at this point. But again, the first thing to watch would be, how does gold perform around 1950? Because I think if gold can take out 1950, especially on a monthly and quarterly basis at the end of the month, I mean, we see gold closing comfortably above that. Gold's going to have even more momentum after that, and I think it would pull up silver and the mining stocks, even if they're still underperforming.
Well, I think that's what a lot of people are wondering, right? Because it was last year that everyone was talking about how well gold did compared to everything else, but a lot of our listeners are invested in the stocks, and those did not hold up well at all. So is it simply then just gold breaking out, maybe even going to all-time highs where money does then filter down to the stocks, or could that happen before gold reached all-time highs? It's a tough balance here, Jordan, but is it now a good time to invest in gold stocks, or are we simply still waiting to see what happens in the broad markets?
I mean, I always say this, but I would say it's company specific. You have to look at a company and where its current value is, and is it cashed up, and those types of things. Because if precious metals were to sell off from here, maybe you could find something you really like that's really oversold. There's a lot of value, and so maybe it's not going to perform as poorly as others. But yeah, it's a very difficult question. And to kind of do a cop out, I would say generally yes, but here in the very short term, you do have to be careful, because there is that scenario where you could see the stock sell off with the market. I think the idea that they're going to, crash like 50%. I mean, I don't want to eat these words later, but I really don't see that happening. I don't see a repeat of 2008, 2020. I think that's ridiculous right now, and gold is so close to making this epic breakout. But again, certainly there is a scenario where they could roll over and, I don't know, maybe they could decline 20% if the stock market goes down 20%, and they'd still be above last year's low. So to me, that's kind of that's like the realistic worst case scenario, that you buy some miners and maybe you get hit in the next couple months, and maybe at the end of the year it's completely meaningless because they're way higher. So I don't mean to cop out, but it is kind of difficult to call here, and you just have to be mindful of that. There is that possibility that they could roll over and get hit a little bit with the market, while at the same time you do have to consider that if gold can clear 1950 pretty easily in that scenario, then there's a real risk that gold is going to make a new all-time high is almost imminent. And in that scenario, they're definitely going to get pulled up and really start to gain.
I think that's such a great point, Jordan, because when people are trying to decide should they or should they not, you have to look at both sides of the equation. Yeah, if you get positioned now in the mining stocks, you could have to suffer a drawdown if the general stock market pulls back in a recessionary scenario, as you laid out. But if gold keeps on trucking, these things are going to eventually get dragged up with the price of gold. I guess a question I have, we've been talking a lot about how margins have been squeezed over the last 2 years with inflation. Even though inflation is coming back some, a lot of those prices are still a lot higher for the producers, for bringing development projects on. So even if gold does go up above the 1953 close for this month and quarter and gets a good trend going, and let's just say it makes an all-time high and gets up to 2100 plus, are we going to see the same kind of moves we've seen in the past? Because it seems like even at higher prices, because of the margins being squeezed, most of these companies are not responding like they have the last few times where gold started getting close to 1900s or 2000 level. What would your outlook be if we made it up to 2100? Would it just be the producers that get a bid first because they're finally getting back to where they were a couple of years ago? Or how would that filter down to the juniors? Just your thoughts on how the mining stocks would respond to, let's say, a break above 2100.
In a word, beautifully. Because if we look at historically, you get the best leverage when the gold price is coming off major oversold bottoms like 2020, 2008, the early 2000s. I mean, I can think of a few others. There's that, but then also when gold makes a major breakout, because when gold makes a major breakout, after that point, it gains quickly, and the gains are significant. So and that's when your margins are really expanding, because they expand in a short period of time. And gold usually makes these breakouts before, gold's a leading indicator for inflation, basically. So gold makes these breakouts before you get the inflationary cost pressures. And so, I mean, what did we talk about earlier? Look at what's happening with copper, inflation expectations, the oil price. So these things are breaking down. So inflation, you're going to hear much, much less about that in the coming months and quarters. So again, not only do you have gold breaking out, and so in this scenario where you get a gold breakout, I mean, we're looking here, it's in the 1900s. If gold breaks above 2050, 2070, it's above 2100. Then a couple months later, it's 2200, and suddenly it's like, okay, well, there's another, that's another $300 onto these margins. And we look at the markets, and they're telling you there's not going to be cost pressures over the next year or so. So it's both sides of the equation, revenue and costs, are going to be in good shape. And so there's two reasons why when you get these major breakouts, why the miners really leverage and do so well. Because again, you get the huge the quick add on the top line as the gold price is running. And then secondly, usually when gold breaks out, it's 1 or 2 years ahead of when you get this inflationary problem. So what you can see, the measured upside target, the first one is 3,000. So, hypothetically, the gold breaks out, it's running 25 to, and maybe when it's 26 or 2,700, then that's the point in time when, and we're 12 or 18 months from now, whatever, when inflation is coming back and it's rising again, it becomes an issue. So yeah, and this is why I'm not concerned with the miners and silver really underperforming here, because if and when gold breaks out, that's when you're going to see the miners and silver really pick up and really outperform.
Okay, so it really sounds like we are, again, just waiting for, I guess, this breakout to happen in gold, and that's going to pull these gold stocks higher. We usually talk about how silver and the gold stocks can lead gold, but this sounds very much like a gold specific move. And hey, gold has been moving well. Even today, gold's moving up as the dollar is moving up. So it's a better environment for gold. I know we're all sitting in these gold stocks saying, come on, gold stocks, go higher. Maybe it is just waiting for that breakout and that sustained breakout to all-time highs for gold. Who knows when that'll happen, but you have given us some levels to watch, especially at the end of this month and what will be the end of the quarter. Jordan, thank you as always for your time. I think we're all rooting for gold here to move higher and consistently higher. So we'll follow up with you next week. Thanks for your thoughts today.